Well, the CEO Confidence Index recorded a marginal rebound in overall confidence as it rose 4.5% to a score of 58.06 in the third quarter. The financial services sector slumped 17.5% despite increases in sentiment across all other sectors. Joining us now for a look at the index is Rick Irving, associate at Mercantech Capital. Thanks so much for joining us, Rick, this afternoon.
Thanks,
before we get into the nuts and bolts of this actual survey, just how broad a perspective are we getting here when we say CEO Confidence Index has recorded a marginal rebound?
Well, what the Mercantech CEO Confidence does is it collates the views from the CEOs of top South African companies, predominantly listed and large private companies, and then provides a leading indicator as to how business leaders perceive the market conditions in the economy going forward. Mm-hmm. So we have well over 100 top CEOs contributing to the index.
Of course, it's the financial services index that's backing the overall trend. We've seen a decline of 17.5% come through in confidence levels amongst those CEOs that operate in that sector, and quite a turnaround from what emerged in the second quarter.
Yes, in the second quarter, they were the only sector to show an increase in confidence. It was a small increase, only 1.5%. But then in the third quarter to then show a 17.5% decrease in confidence was quite a turnaround.
In Cape Town, the people that you're talking to are obviously human beings. They may have had a bad morning. The children may have been playing up on the school run. Whatever might have happened in their lives. I mean, how representative is this of the actual business side of things, and what sort of questions are you asking? There are so many indexes. There are so many surveys. I just wonder, in the brief history that you've had of this index, is it a forward-looking index? Is it a forward indicator, or is it retrospective?
The index itself, it does, lend itself to the forward-looking markets, but the questions themselves are pretty much how they perceive, conditions, as well as, their levels of growth within their industries or their particular companies now, based on the previous 6 months. We found, in this particular quarter that the CEOs in the financial services sector were particularly bearish about their prospects on their own company growth. So I think maybe just perhaps they are, waiting to see what happens with the, global economic conditions before they really gear up and start to put a big effort into growing their companies.
Of course, within the financial services sector, we know that, fortunes, they are highly correlated to GDP, and that's telling of how they feel about overall economic prospects. So run us through that, because, while that has come in low, we know that in the third quarter, confidence levels with regards to the overall economic conditions in the country is low, generally speaking. So why is that?
Yes, correct. And as well as in our index, we often notice that within the third quarter, the CEO's perception of economic conditions is suppressed. I mean, we have had some financial results come out recently, showing good results. So, I think perhaps financial services sector are, sometimes perhaps, overly kind of cautious. Even if we've seen good results there, their perception of the future might not be as great, so perhaps that has something to do with it as well.
Yeah, it's very interesting, Rick, because I mean, as Alicia has alluded to, the banks. I mean, if you look at something like FirstRand's results yesterday, a very, very strong increase in earnings, 25% plus, that sort of thing. And you're suggesting that financial services people are cautious. I always used to say the Standard Bank CEO over the last 5-6 years I've been interviewing him. He's always cautious, and yet his company always seems to do well. How much of it is macro-based? How much of it is South African-based? How much of it is influenced by the international machinations that we report upon every day? Is there one particular area that the CEOs focus on in order to answer their questions, if you like?
I think a lot of it is internationally based. One of the parts that we've picked up and that we've really identified is the increased regulation within the sector. So this increased regulation, coupled with fines, as well as the banking scandals that have plagued the industry of late, and this increase in costs, causing this them to be overly cautious particularly for the future.
It stands in contrast to what we're experiencing, what CEOs seem to be experiencing in the retail space specifically. I mean, there we've got retailers pretty optimistic about the way things are going moving forward. Does that come as a surprise to you? Because both of these are interest rate sensitive sectors.
Exactly. So, definitely it's come as a surprise. The consumer goods and consumer services sectors recorded increase in confidence of 11.3 and 12.1% respectively. And as you say, on the one hand we have food prices increasing dramatically, what with the drought in America. We have fuel costs on the rise, sanctions in Iran and whatnot, as well as constant electricity hikes. So what with that coupled with increased consumer spend, it's definitely going to pose an inflationary risk.
Does it, what's interesting is that you've got the bankers on the one hand being overly cautious. Are the retail CEOs possibly a little bit too exuberant? Because as you say, you've got, these factors that they've got to take into consideration, as well as the fact that a lot of the consumer spend has been as a result of unsecured lending. We've been talking about unsecured lending posing a risk to consumer spend moving forward, in that we possibly may be looking at a bubble that's set to burst.
Yes, exactly. So, those heightened levels of unsecured lending, as well as the interest rate cut that we had in July. So both those, factors which, as you say, could be temporary, definitely affecting consumer confidence on this side, as well as, so yes, with those, with that unsecured lending, as soon as the actual consumer, when those, interest payments start to kick in, and as you say, if it becomes the end of the bubble, then we could be seeing decreasing confidence in the consumer goods and consumer services sectors.
Rick, what I'm intrigued about is again the human aspect. So forgive me for banging on about this, but let's say that there's a situation where you walk into a CEO's office with a list of questions. That CEO knows that his company is going to be taking or making an expansion in, for example, Nigeria, and he knows that's going to be earnings enhancing in the future. So therefore he's confident. But on the other hand, the Marikana situation in the Bushveld complex of the platinum sector has started to blow up, and everyone's a little bit negative about South Africa. We may be getting a ratings downgrade, all that sort of thing. It's a theoretical situation. What does that CEO do? Is that CEO loyal to his company, or is he loyal to what he thinks is going on in the country? Do you see what I mean?
Yes, definitely the actual economic conditions do play a big part, as well as the conditions of the actual individual CEO's business. So that's what we try to do in the CEO Confidence Index, is split those questions. So there are only certain weightings that they can have depending on the different components. Some regarding the actual companies and the industries, and others the economic conditions. So both the human part coming into it, as well as the conditions, if you will.
If you look at those conditions, I mean, we've got both retailers and banks putting on the table just their aggressive approach and the kind of expansion they're planning with regards to expansion on the continent itself. I mean, to what extent does this translate into planned level of investment and the kind of confidence CEOs have right now in those respective sectors about where they're going to invest next and just how much?
Where they're going to invest next, unfortunately, the index doesn't cover those kind of details. As far as investment does go, though, especially with what we have experienced in basic materials now, with this Lonmin story, and with the ripple effect now into other mining companies, if we do see this unrest and whatnot go into different sectors as well, it'll definitely affect the economic conditions point of the index, if you will.